Hi, welcome to the Market Alert for Tuesday, the 7th of December 2021. There's not much news around at the moment, very quiet. So the headline really is about Friday. Stocks erase payroll puke, bonds battered, and crypto bounces, and that's about it. Yesterday, the Dow moving up strongly, which we'll look at in just a moment. But first, quick look at the implied volatility. On the left here, we've got the recent high and low, and yesterday we saw the implied volatility drop down to 20.34 from 23.51 on Friday as the Dow moved to the upside. Let's have a quick look for today. Barely any news today, just a couple of medium impact news items. And as I said yesterday, there's no news, so the market will do whatever it wants to do, and it moved back to the upside yesterday. So let's have a look at the Dow. And you can see yesterday marching to the upside after having divergence in the stochastics. The market has found support, big cluster of volume, and then trading down to 89% as well, and the 200 MA. And there's the buying coming in there. Market sideways to lower on Friday, but staying above the 200 MA, and then marching to the upside yesterday, straight through 62 and 50 fib retracements there, so we can remove those. Next upside targets for the Santa rally is 78% and 89, which you can see there, and also prices now trying to get above the 50 MA as well. We've got the 20 bar moving average here, which also needs to be taken out as well if prices are to move to the upside. The fibs are currently drawn in from this red line to this green line, but if we take out 89 on this section of the move, then we'll move to this high, back to this low to draw up the next set of fibs, and then of course back to the all-time high, and then drawn from here. So we've got another 3 points on the upside that we can actually draw the fibs on the upside too. And of course the last one will be in this sort of region, would be a full completion back to 89% of the recent move or correction to the downside back to the upside. Bit of a V-shaped one going on at the moment as well, which is typical of the Dow as it corrects. Normally you would have a situation where the market would move higher, come back around 89%, and then move back to the upside. And we're not getting that at the moment. We're getting the classic V shape at the moment. Doesn't mean to say that we won't. If we have a look at the last correction here, we had a pullback on this one, a double bottom just below, before the market then made its way back to the all-time high. So this time it was looking like a bit more like a V-shape correction there. In the 30-minute chart for yesterday, you can see the Dow moving strongly to the upside. Never stopped, just kept moving as prices were driven higher on the lack of news items yesterday. Let's have a look at the DAX. Bit of a different story here though. As you can see, the market sideways, but managing to move higher yesterday. We've gone green on the parabolic. We've got the green on the price action as well. And this one is only drawn from here because you can see the red line there to here, drawn and projected back, and you can see there we're just coming through the 89%. As we come through this, we're going to change our point of reference, and we'll go to the next red line to the upside, and we can either use this green one or this one here. They're automatically identified, so from there to there would give you a set of fibs. And also, if you wanted the longer term, you can actually or the longer term swing, you can use this as well. You can actually use both and have them there to show areas of confluence, which would add a bit more weight to resistance in the market. And interestingly enough, down here you can see there's quite a cluster there. The market is trying to drive through at the moment, and also the 200 MA ties in with this area as well. What I prefer to do is to try and keep things a lot cleaner, and what I will do is just have the one set on to begin with, and then have a look and then just take out the ones that I don't want. But I'm looking to actually automate this, So as the market, it will draw them on the chart, and also as the market goes through, it will automatically erase them as well. So I don't have to sit and manually remove them. So that will make life a lot easier as well. And because the points of reference are automatically identified, then it shouldn't be too much of a task, he says. But I'm not the one programming it into the software. But it seems pretty logical to me. And let's see if we can achieve that. Then everything is a lot more automated and not having to identify it. Let's have a look at the 30-minute chart as soon as I can spot it. It's around here somewhere. There we are. So yesterday we see the DAX also moving lower to begin with, and then just straight up all the way, and then following through on the overnight as well. So it's a lot easier and cleaner to see on the 30 minutes. Again, you can see how it came through all of the averages here, back above the DP, parabolics all green, and the market making rising lows. There's an odd bit of potential weakness in between there, but just grinding higher with the Dow, and moving all the way back up to towards Friday's high, of which the market then has taken out and also gone through yesterday's high, which we've seen in the daily chart, heading up towards the R1 there. And in the smaller time frame, in the 2 minutes for yesterday, you can see that the market from, let's just go back a bit further, market picked up a bit at 7 with the futures opening. We got a retracement back here, and then the market just trading sideways to higher until the cash market opened. Then it was hit back down to the DP level. We saw some divergence coming in there as well, which indicates that the momentum is dropping off on the downside, which it did. And we start to see some demand coming into the market as well, and support at the big round number level there before the market gets back above the 200 MA. And then again, you can see that we had a bit of divergence. We ran out of momentum. The market pulls back, and then we had this spike to the upside, and then the market just drifting sideways until we got to around 9:30, and all of a sudden the market decided to move sharply to the downside by 100 points from this high. So that sideways move then converting into pressure on the downside. We see the momentum being lost on 2 occasions as the market traded sideways and tried to hold at the DP level, failed to close back above the 5-bar moving average. All indications to the downside. You've got, and again, just keeping it simple, you've got the 5-bar below the 20 below the 50, and the 50 below the 200, and all below the 200 there. The market then finding a bit of support before the final shakeout, where you get the cluster and climatic action of volume and also oversold to the downside before the market then starts to make its way back. And again, you can see those 2 big selling bars there as the market finds support at the BRN, and that level is 15,150. And then the market moves back to the upside, and that's where it continues all the way through, apart from an initial shakeout with the Dow at the open. You see the demand come in, we're oversold, and then we close back above the 5-bar, and we're already moving above the 50-bar moving average. You can see the averages all line up then to the upside, already back above the 200 MA as well. 50 is above this. The 5, obviously the fast one, is then driven through, and that's why we've got a few red bars in here, because we're using the 5-bar MDI just to show us where that weakness is. But notice how the market finds support at the 20-bar moving average, breaks to the upside, and then continues as well. We had a bit of a lack of momentum here, and also here there was some divergence, but the market driving through this. And as you'll see, these S's, which is supply coming into the market, this is indicating that anybody that was short in this sort of BRN area they were absorbing the orders as the market came through, and that's why you'll see these S's in the up move. as prices drive, they're finding resistance and they're having to absorb anybody who's wanting to sell at these areas. And you'll see these a lot at the BRN areas as the market finds a lot of people selling limit orders in these sort of psychological areas. And then overnight prices are sideways. There's the open. We dipped, we came back, we filled the gap. And if we just move on, because there's not a lot to see, prices have just moved back to the upside there. Quick look at the metals. Let's have a look. So yesterday, surprised that silver managed to hold sideways. We are oversold on the stochastics, and we see that we've got a lack of momentum to the downside at the moment. We're in the delivery month for December. The CPI numbers are out on Friday, and that is what the silver market is waiting for, as is the gold market, because obviously there's a relationship between inflation and the metals. That's if the bankers would allow it, of course. I mean, these prices are ridiculously low, given the fact that we've got 40-year highs in inflation and we've got 42-year lows in in the silver, which again is quite incredible. So it just goes to show you how much it's being manipulated. Meanwhile, in the dollar, this has bumped into the 78-89% retracement and is sideways at the moment, trying to hold above the 5-bar moving average. A close below this would be good. It would help to support the market, or the metals markets, to the upside. Okay, I've gone on long enough and covered a lot there. But there is a lot going on, even though the markets are fairly quiet. Let me just bring that in there so you can see that a bit better. Just notice that a bit late now. But yeah, you know, we can see what's going on there. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.